You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome, everybody. Here we are, Wednesday, of course, Master Trader Live. Today, we're going to be talking about pivots. Explain what is a pivot and how we utilize them for, let's say, maximizing profits, managing trades, referencing support, resistance, when it's created, and in many ways, they're a very, very useful tool. We'll explain how we use it. I say mostly for management, and every MT Live is about educating and picking a particular concept that we use to make money in the market. So let's get to it, and I think you'll find it really interesting and helpful.
All right. Good afternoon, everyone. Yeah, and Greg, as I was talking about today's program in the green room this morning, pivots for exits, they're going to clearly understand here in a few minutes. But everybody, there's that saying, Greg, of, oh, you can never go broke taking a profit. I disagree with that. And the reason for that is if you're taking small penny gains when you're leaving 90% of the potential move out there in the market, and then even if you're disciplined and got stopped on that one, then the gains and transaction costs aren't going to make up for you to have a positive P&L curve. And so that's one of the amazing, beautiful things of today's subject. And you hear me telling people in the green room all the time of walking through what we're going to do. So I won't even summarize it right now. But there's one chart that I want everybody to print. We'll talk about it when we get there. And you created it, and it's a masterpiece for allowing you to objectively get more potential profits, and hence today's title. But also the importance of pivots we're going to get into is objective trend change. And so let's just plow on here.
To add to what you said, Dan, was look, if you constantly taking small profits and leaving a lot of money on the table, you better have a hell of a high batting average, meaning your success rate has to be super high. Whereas if you have a select number of winners where the gains are large and you keep the losses small, you'll be profitable. And that's all covered in the money management course, advanced money management course. But people that are super scalpers, it's kind of like, working really, really hard because you're doing a lot of trades. But if you have a high batting average when taking small profits, you can be profitable, but it's a difficult game. All right.
Yep. So our intro slide here, this is our approach to trading, technical based trading, anything that moves. Price is king. Greg's amazing swing trading course puts all of these concepts in a thought building process where at the end you understand price action. It's just a matter of seasoning after that. So everything starts with price. Give me a pattern. People hear me saying all the time, no pattern, no trade. I don't even care about the rest of this stuff. Somebody this morning said, oh, Dan, I want to buy this because of a relative strength. Well, that's not a pattern. You didn't even get past the first one. So then where is that pattern in connection with the overall trend, support and resistance? And Greg, you had a long discussion with John today about multiple time frame analysis on Tesla. We want those in agreement to maximize the odds of the trade working out. Sure, we'll look at volume. What are the broader markets doing? What are the internals doing? And now here's one component of today. So I mentioned we're going to be looking at trends for, pivots for trend analysis, et cetera, support and resistance analysis. But the part about objectively getting higher profits, That's our position and money management component of this approach.
1 second, Dan.
Sure.
Vince had posted a question saying, I'll get breakup in the voice. Vince, it's probably your internet connection, maybe bandwidth, because otherwise everybody would be complaining. And yeah, so questions you can just post right in the chat if you put the drop down to everyone rather than using the Q&A.
So Greg, this is your masterpiece. You know, our approach is what's on the prior slide. So many people are trying to sell you these so-called proprietary oscillators and GANs, and I don't even know how to pronounce what's the
Chikumi.
I don't even know what that is. And so you would take it.
I mean, I can't really explain it other than, I'd call it the ultimate indicator, defines trends and support and resistance and entry points and so on and so on. But, where are the prices? All the squiggly lines are covering it up. And, there are courses that are sold on how to use this thing, but it's just, I wouldn't say the ultimate. I've seen worse than this with lines, so many lines. It's ridiculous, but, you'll see as we go through these MT Lives, if you're new to MT Live, and even in this one, the simplicity of the approach, it just removes all of this hocus pocus off of your chart. You don't need oscillators and various indicators and trend lines and fib lines and, all of that stuff. I finally call it brain damage. And it certainly is a major reason why so many fail and lose money at this, because change the settings, different indicators, and so on. Why doesn't it work this time? It worked on the last time. And it's just a rabbit hole, an endless, cycle of, just going around and around. And that's what this industry is built on.
Yeah. So this is another just beautiful slide, simple. So instead of that last slide, we look at green and red candlesticks, a couple moving averages, and volume. That's it. We make all our decisions on that. So on our first slide where we say no setup, no trade, this is the setup. We have more, but these are 9 beautiful setups. Applies to anything that moves, any time frame. And then we take this picture, as I said, on our checklist, and we see where is it in the trend, support, multiple time frames, et cetera.
1 second there, Dan, before you go on. Question on YouTube there was asking, is level 2 data not a consideration? Well, as a day trader, it is a consideration in a very minor way, because we're not super active traders where we're looking at what's the bid and the offer, how many levels there are, what market maker is there. That is really something from the past. That's kind of, gone away, with, algos taking over the very short-term trading, and we can't compete with algorithms and computers. And so a level 2, the information changes so rapidly that it's not that you can't make any sense out of it, but you will just be exhausted by the end of the day and your broker will love you, because you'll press the button like an idiot, because every time you see red prints and green prints and, the bid and the offer changing, you'll want to press the button. And so it's just not a productive way to trade for the majority. Most of the guys that traded this way back in the 90s, they're not around anymore. And the couple that are, I just kind of relate them to a used car salesman. They know that it's a losing game, but this is what, they put out there as their wares. And, not that all used car salesmen are bad, but, a lot of them, you go to the parking lot where the clunkers are there and, shiny paint job and so on. But look, you're going to look at a level 2. If you're a day trader, first of all, make sure that there's a plenty of liquidity, that it's an active stock that you're trading, and look at the spread, because even when, we look at things in the green room and we look at a stock that we're going to trade, and, I'll look at the spread and I'll tell people, hey, that's got a 30-cent spread. It's a consideration, or sometimes it's wider. So level 2 isn't a big part of what we do, but as a day trader, it's something. What's the spread between the bid and the ask, and is there liquidity there? If the chart's there, press the button.
All right, so this is the masterpiece slide that I want you to print it, put it on your table. This is going to help you get meaningful gains off your setups. So up here in the upper left, this is just to put it in perspective. Once you're in a profitable position, if you want the bigger gains, you're going to have to let it correct. Correct means retrace against you, because I still have a bigger gain target on the table. So let's just take this hypothetical here. On our 9 money patterns, this is what's called a buy setup. So it's a pullback in an uptrend on support with a reversal bar. So we enter over a prior bar's high, stop under the low. So we're in the trade. Do you want to sell after 1 bar? Well, no. If it's a buy setup, I expect it to take out this prior high. It's in an uptrend. So here we got a couple rules for us. Keep the original stop from the entry. That's our entry. Only trail under bar by bar if prices accelerate, meaning they get climactic. There's sometimes, Greg, we had one the other day on Halliburton or something. It was an oil stock, and it was a core trade to us, is what I posted. And it just did this, that we took like 25% gains in 5 days. We're like, we're done with this. It accelerated. I don't want to wait for the pullback. Otherwise, halfway to target, use your pivot to raise the stop. So we're going to get into what pivots are, but this is the part that I'm saying here, you have to let it retrace. It's totally fine. Take half under a prior bar's low. You got a lot of money on the table. Take half. Or if you're trading tight, it's I don't want to get into all the derivatives of what we're teaching you here as black and white, but some people say, all right, I follow everything you're saying, Dan. I'm selling it all, and I'm just going to look for a new pullback. But let's continue with the black and white rules here. So you're out of half.
Just give them a little bit more than what you're doing here. So what I drew my little figure down here. Let's just assume that this was where the move we got in here for whatever reason. Let's just say right here.
I said it right.
Yeah, and so the point is this. Let's just say was the beginning of the move, where it's like, okay, that makes sense to sell half and let it pull back, because the assumption is at the beginning of the move, it's going to continue. Well, if we did that, and now it does that, and that's why we start trailing bar by bar, because like Dan said, the other stock got extended. So why let it pivot? Because by the time it pivots, it could be down here. So, always some common sense to what we're doing.
All right. So, we're giving you some rules here. This is a great starting point. So once you're halfway to your target, then you start trailing. So this is a pivot low. We're going to get into the definition in a second, but it means 3 higher lows on the left, 3 higher lows on the right. That is my new pivot. So you're raising the stop from here to here, because the stock still has room to go to its destination. Once so right here, once it exceeds the prior pivot high, you move the stop into the prior pivot low. This is so black and white. You could have your computer do this for you. Once you're 80% of the way to your target, so Greg just wrote on here target 1, target 2, so I'm at 80% of the way. Then, and prices are accelerating, go ahead and just trail under a prior bar's low. This might rally 5 more bars, 2 bars. I have no idea. Let the stock take you out. But because it's made such a big move, we've been in it from down here. We're 80% near the target. As Greg said a moment ago, I don't want to sit through the creation of a new pivot. Take your money. You're getting close to your target and it's accelerating.
I marked here, just so everybody make it perfectly clear, we don't know this is going to be a pivot low until the completion of this bar. Because let's just say that that bar would have done that. Well, we wouldn't have a pivot. So you have to have the 3 higher low bars. And then as it's going up, as the ranges expand like that one, it's going to take a longer distance. So that's why saying when it gets to 80%, it's moving up. And as it gets further and further away, the ranges begin to contract because, now you have more equilibrium between the buyers and sellers. And that's why the range contracts. And it's going to be easier to take out a prior bar's low. But, sometimes, they just continue up smaller. And, so that one bar, taking out that one bar is a really excellent way of continuing to manage once it does get extended.
And Vince, what we're showing you here applies to whatever time frame you are trading. So now we're going to show you how to determine trends and using that with pivots. These are the only 7 moves that stocks, options, futures, cryptocurrencies they can make. So identifying what trend it is in is the first step to say, okay, what strategies do I have in this trend? Okay, so what's an uptrend? Higher pivot high, 2 or more higher pivot highs, higher pivot lows. Downtrend, the opposite, sideways, relatively equal pivot highs and lows. We're going to show you here how to then objectively determine when trends change, which are these 4, what we call the transitional phases. Let's do it objectively. This looks like you, Greg.
Where?
This slide.
Well, I made it. All right. So what it's displaying here and is to, first of all, we're taking note that with these little stick figures, we're saying they're pivots. So there was a pullback and it continued higher. And so the trend line aficionados will connect the dots along bottoming tail bars or whatever. They may or may not be looking, may not be a pivot by our definition, but it may be some point in the chart where they connect the dots as they see them. So we're defining the dots or the swings by saying this by the definition of that pivot. Now, if we do that, right, and now as it continues to make higher highs and higher lows, of course, that's the uptrend. So by breaking this line doesn't mean that it violated any support. And that's the subjectivity of trend lines. And so as you look at trend lines and everything you put on your chart is going to create a thought and a belief about what someone told you about it. And so when you look at this and you say, oh, the uptrend line broke, the trend is broke, now what? And then lo and behold, so many times you'll see it just took off again. So was that meaningful when it broke the trend line? In this case, no. However, based on our definition, with this MS is what we're calling major support, which is the low prior to the higher high within a trend. And if prices retrace below that, it breaks the line every single time without fail. Has to happen, makes this useless. You don't need it. It's subjective. And just this simple definition will tell you it's no longer in an uptrend. Now, that doesn't mean you do anything. It just except shift your thoughts to the uptrend is over. It's the same thing in a downtrend. pivots, lower highs, lower lows, makes a new low, major resistance, trades above it. The downtrend is over, black and white. Move on. This, again, not necessary.
All right, so pivot highs, here's the definition. And this is Greg uses eSignal, I use TradeStation, nothing proprietary here. So a pivot high, the computer is marking these. So the high is 3 or more lower highs to the left, 3 or more to the right. The computer is going to do that. Same with pivot lows. So you can see now on trade management, it's just a visual aid. The computer is spitting that out for us. So apply the pivots for exits to anything, to any position you're in. You can see how it objectively helps you.
So Don has made a very good observant point. He says pivots could change based on your time frames. Yes, they could, and most of the time they will. So if we go down to too small of a time frame, right, we'll have pivots all over the place potentially. And you may not want to do that. Now, if you're trading from a 1-minute chart or a 30-second chart or whatever, the software is going to put pivots there because it's black and white. Now, you really may not want to see that because it's going to create more analysis and more thoughts about what's actually happening in that time frame. What I can tell you is that if you want to be aware of little short-term turning points, let's just assume that this, well, we can see it's a daily chart. Let's just assume that this is, for argument's sake, a 5-minute chart or a 15-minute chart. And the software is marking those pivot highs and pivot lows. Where you see a bar like this, it's not a pivot. In some smaller time frame, it's going to be a pivot. So what I know is going to happen when it reaches there is there's going to be some sellers in some little smaller time frame. Now, if I'm trading this trend of higher highs and higher lows, my assumption is that prices will continue to go higher. It's not a fact that it will do it, but I have to make an assumption. But I know if there's a topping tail bar in this time frame that, even something like this, it's probably going to be a pivot in some smaller time frame. Yeah. I'm choosing to say I recognize that, but I want to ignore that as a reference point because I'm not trading that smaller time frame. And you have to do that because otherwise you'll be looking at, 10, 15 different time frames and going out of your mind.
So this is just showing you the arrangement of the pivots, the distances in the different uptrends, sideways, and downtrends. So this presumably was an uptrend, went sideways, broke down. Now I have lower pivot high, lower pivot low, deep retracement, held. So now I'm in a sideways trend. Relatively equal pivot highs, relatively equal pivot lows. This pivot low got violated, and now, correct, fast lane. So I like your fast lane. Yes. So this is a rapid fall. So if this thing got climactic. So would you be sticking around to let it pivot?
No.
I don't know. Would you maybe for a little?
I say that because how fast it went down, the angle of retracement and the odds of a snapback there, and to get a profit like that so quickly, I'd be inclined to take all the money. But
without a doubt,
it's like, what's to the left?
Right.
How long has this been going on? We're talking about a particular concept here, but there are other things that come into play. HMT Live is on a different subject, and the idea is putting them all together creates a strategy and a course and so on and so forth. The fast lane, so to speak, really is taking the course to hear all of it at one time. So while this is climactic on the way down, it doesn't mean it's going to do that. Would
So-
you wait for the pivot low to enter, or bar by bar, 2 bars with higher low bars previous to that pivot? I'm not sure what you're asking me. Would you wait for the pivot low to enter? Well, I'm not going to know this is a pivot low until, well, this is the low bar. So 1, 2, 3. Those 3 bars are going to have to form before I know that's a pivot low. No, the earlier one. Would I wait for this
I think
enter
it's here, I think.
on the short?
Yeah, that breakdown, right?
No, you could, right? You could, right? And you're going to need a larger stop, of course. But the fact, first of all, these pivots, so we call it's creating resistance, right? After this deep retracement, I would be thinking, oh boy, that was showing strength. Maybe it could take it out. I don't know. But each time it comes up to one of these pivot highs, I know there's going to be sellers there. Now I'm looking, what's the reaction going to be? So when we talk about bar by bar analysis in candles, it's like, damn, that thing went down, like the rock off the roof, big wide range bar. That's a power bar. Now as it's come down to the pivot low again, I know there's going to be buyers. The way this came down, a little difference here, the way that came down versus the way that came down. So this was a stronger move based on the bars and the angle of retracement. So look, there's no pivot over here in this time frame, which is what I would have liked to have seen. And it's really not a really good clean continuation pattern because of the smaller bars. So it's not what I would show you as a textbook pattern, but my thoughts would be that this has the possibility to break through these lows, that is down there. Now, there are other things I might be thinking, oh, this is the S&P 500. Well, is it showing relative weakness to, the Qs, right? QQQ, there are other factors. This is a daily chart. Is the weekly also in a downtrend at the same time? So again, there are other things to take into consideration. And John's kind of asking me that, where would I look to enter on something like that? Well, this is where you're assuming it's going to go down, but will it hold this or not? That's the unknown. So I wouldn't put my stop above that high. It's too tight. But this is a continuation pattern. This bar, and again, this is a daily chart, but intraday, this went up and got slammed down. So you could enter it there. That's your continuation bar. Why this stalled here? I don't know. Maybe it was Christmas because I see it's the end of December. But there are other factors. But this is a continuation bar because the move just began there. Well, the 15-minute, that's a whole nother story, John.
Yeah, so this is just showing you erratic pivots. This is not a trending pattern at all. They're just an opposition, erratic action. This would be a put or call spread candidate for us, which just means we find these short-term erratic pivots and we sell puts under support or call spreads over resistance.
And Mikan's question, would the formation pattern in the lower time frame weaker when it breaks when the same formation, a higher time frame, which is more trustworthy formation? Okay, so that worthy question really refers to understanding multiple time frames. And so with that chart that we were previously looking at, the intraday timeframes would be in a downtrend. And so the whole multiple time frame understanding is an art of itself. But I can assure you, if you look at too many time frames, you'll become thoroughly confused. But that chart, moving down as it is, just like this one is moving up as it is, the intraday timeframes, this is a daily chart, the intraday timeframes are in uptrends. Now, not all of them, because look, the hourly will be in an uptrend, the 15-minute will be in an uptrend, most likely the 5-minute will be an uptrend, but on this bar, if you're looking at a 1 minute, likely that's in a downtrend. But do I want to pay attention to a 1 minute chart in a downtrend when I had, everything else pointing up? Again, common sense.
So downtrend. This is a nice reversal here, moved up, came down here, bottoming tail made a new low and held. This is the oil services sector. Is this a reason to buy over this bar's high? No, it's still a big mess, but it's a big, we're talking about pivots here. So we got lower pivot highs, lower pivot lows, right? So we've covered this already. So now we have a higher pivot low. So Greg, I can't talk to people, but
Pivot high.
pivot high. So the quiz would be, if they could talk, is, okay, I've had a big fluid move down. I have a higher pivot high. So Greg already answered it. We've broken the downtrend. So what do we do on a situation where we've broken the downtrend? Well, we're pattern traders, so give me a pattern. I mean, that's a given. But what we're looking for is some type, yes, controlled pullback, but I'll just simplify it. Give me a compelling pattern with some type of a potent retest would be ideal. So it was not until this wide range bar closed like this that we gave this to our ETF subscribers, our ETF investment trader, which only trades ETFs. And look at this wide range bar from a reversal at major support after making a higher pivot high. And Greg, I just looked for the fun of it. And this was last December, obviously, and now it's March. So within 3 months, this went to $306, all based on this, what we're teaching today.
Yeah.
$306.
Well, it sure helped that energy was the only sector going up.
Yeah.
And maybe it still is the only one that's in an uptrend.
But the other, okay, so we're covering pivots for two things. I just covered the first part of it, trend change, but also, so Greg, you tell them, how would you use your pivots for exits on this rapid move up?
Well, there are no pivots.
Right. So,
well, look, we look for range expansion bars, which, this range expansion bar is igniting the move, which tells you institutions are jumping on board. Day traders aren't creating big bars like that. You can see the volume here. Now,
I don't see your pen.
I got the little mouse thing there. I can draw it. However, look, see this bar that took out the low? That's a pivot in a smaller time frame. So it broke this bar's low. So I know intraday, I don't know, 30-minute chart, I don't know, some time frame, whether it's hourly, maybe not hourly, there's going to be a pivot there. So what I look for, what I was saying earlier when we looked at that chart, is that when you see these bars with tails, there's going to be a pivot in a smaller time frame. Now, I don't want to react to every one of them, but this one is important because it took out a prior bar's low, and the range, the distance from high to low, is bigger than this one. I'm eyeballing it. Maybe it's the same size, but it's about the size of these, give or take. Maybe it's a little bigger than that one. In any event, it broke the low and it sprung back up. So I know it's a pivot in a smaller time frame. Now, I don't want to move the stop yet, but once this bar forms, my stop's going under that bar's low.
In the
short-term trader.
And that's probably what we did. And you can tell here, January 16, move stop 218 and change, which was under the low of this bar. So the identical analysis of what you just said, that your stop is here. Once this bar closed like this, same thing. And wow, so that was like 30 something point open gain right there.
Look, we're looking to the left. So we recognize, and we're not forgetting about this pivot over there, but our assumption is that because of this bigger pattern down here, these bars coming off of the low, that while that might be a stall point, it really should get through it. And we're going to see if that actually happens. Now, the further it keeps going up, the greater the odds that somebody's going to want to take a profit. And so how meaningful would a pullback be? So
we were we were in a full lot waiting for a pullback. So this red bar did not scare us. We were, based on the slide I told you to print, we wanted this to come down and give a pivot, but it kept going so strong that it didn't give these pivots.
right. So we could go back and look at what this looked like back at that time. But so you got a somewhat negative reaction as it came up into this area, but it never even broke a prior day's low. And that's why we utilized a prior bar's low as a reference point, because intraday, that created a support point at the end of that day. Now, does it break? And if it did break this low, we really don't know how meaningful it would be, but our assumption would be this next area where there's clustered candle bodies, that's where the buyer should want to step up again. So it's a systematic process. We're utilizing pivots and what we call bar by bar analysis and support and resistance. And, it gets more detailed as we add other concepts. Those are the building blocks of what we call a thought process in our factory work.
But Don, you're right. And that's what we're talking about today is objective trade management. Are we near our target? I guarantee you at this point in time at 228, the weekly chart still had room to run. So it's up to you. Come see us in the green room. The things we talk about here at every MT Live, you will get in real time, not looking at these pretty PowerPoint slides. We have a no-brainer 7-day, 5 trading days, $7. We do education, we trade gaps, we review open trades, we scan together, answer questions. It's a great place to watch us in real time. All right, another example here. Pivots, let's trailing pivots for high for trade management. So the VXX is the volatility ETF, and we love shorting this thing. And when we have a bullish bias on the spiders, because this particular instrument just has headwinds caused from the way it's created with rolling futures. So this is telling me that the spiders had a bullish gap up this day. And so and you could have shorted the VXX, but in this particular case, we gave to our subscribers, let's buy the in the money $40 puts for a swing trade. So our original stop is here. And you might well say, well, damn, why are you showing us, why are you trailing on a 15-minute chart if it's a swing trade based on the daily? And I get that. I'm just showing you pivots, which would be a tighter management to protect our gains. So let's just say you were day trading this and don't even worry about the swing. Gaps down under the 15-minute low. Don't even worry about puts either. You're shorting it. That's your initial stop. Now it went sideways. It couldn't even bounce the pivot and it broke down. And this chart is not marking off the pivot highs, but you know what they are now. You can just see them in three lower highs on the left and right. That's now I'm lowering my stop. Once it breaks down, I'm lowering it. It bounced up. There's my pivot. That's my new stop. This one gapped up. And if you were day trading, you'd just take your profits into the close. If you were holding it like we did, it gapped up. Even if it gapped over that, we would use a 5-minute high, continue down, bearish 1, 2, 3. That's my new stop. Now it's accelerating. So do you remember the Greg slide? Now I would be taking half or all. There's nothing wrong with that monster move of taking it all. So Greg, when people need to decide, do I want to let this pivot against me? The answer to that is, are you near your destination? Is it worth giving up these booked gains for the hope of getting bigger profits? That's what this is all about. And that depends on the time frame you're trading, and are you near the destination? Now, me personally, I'm kind of tighter. Would I be taking my full stop, my full profits here? Without a doubt. It gapped down the next day. That's still our stop. Rallied, stalled at resistance, came in. We stopped out. And, you know, look at this. We booked 60% return on capital of buying this put for our subscribers.
Let me answer a couple of questions here.
Sure.
Miguel asked, bar by bar, is it with the same color? So the colors are based on whether it is closing above or below the opening price. And so the red bars are closing below the opening price and the green bars are closing above the opening price. Now you have to put them in the context, in this case, the downtrend. Now, other question, bearish 1, 2, 3, Ed, that's a bearish 1, 2, 3 right there. A wide range bar and an inside bar, and it took out the low. Now, doesn't this look really easy based on what we're talking about management?
Yes.
Yeah, well, yeah. So what's so hard about this? It's what's going on in your head.
Exactly.
You know, so for example, at some point in time, these bars going down could have been green. And so you see a green bar and it's like, oh, it's going to go up. Well, prior bar is high is your first reference point. Is it extended and so on? And so there, the bar not being done is a concept. And so as an intraday trader, I've got a little timer, you know, so I see a green bar and I say, oh, that's a buy setup. Let's say it's a 5-minute chart. Oh, there's 4.5 minutes to go in the bar. You got to wait, you know, because it could become a topping tail. So these bars, some of them could be green bars like this here. Those were green bars at one point, but never took out the prior bar's high. Now, if you're trading a 2-minute time frame, most likely it did. So again, that's a choice. You have to make a choice as to, you know, the time frame that you want to trade in. Do you want things to go super fast? Do you want them to be medium? Do you want them to be slow? And so having to accept the time frame you trade in is part of the psychological hurdle that you have to deal with as a trader, especially as an intraday trader.
A couple more examples. We can go a little faster. So Halliburton here. Look at the pivots. And we're not talking about moving averages today, but the moving averages, we use the 20, is the blue, 50 green, 200. Look at all of these flat moving averages. In fact, Greg, I got to copy this. This would be a marvelous example for our moving average MT Live. Then we had a closing, so see, relatively equal pivot highs and lows with flat MAs. I'm range bound. Now I have a bullish close near the hot top of the range. Interesting. Now I have a gap breakout. That would have been a fantastic entry. And I don't know if we traded it back then or what, but now I have my pullback, reversal on support, gap negated, wide range expansion bar. This is where we gave this particular trade to our advisory swing letters. So we're using pivots now for management. We're letting it come in. So this was a failed breakout, but our stop was still this prior pivot low over here. A gap reversal. It's starting to get a little sloppier, but now here is our new stop. This is my new pivot. As long as the daily and weekly still are not near their target, and the sector was bullish, as we all know, we're still in trail mode using pivots. Again, Greg, doesn't that seem easy? We're following the rules.
It's easier said than done for sure. And so that's why it's all psychological. You have to have trust in the method and accept that sometimes, you're going to get stopped and, things could be whippy, which has been a lot lately. So when things are trending like this, it's beautiful.
And that one slide, Greg, the pivots for exits, that is so important in the green room. Whenever I get somebody to ask me, Dan, should I sell now? Should I take my profits? What should my stop be? I come back to that slide every single time. And that's the good thing in the green room, is because of our interaction and questioning is a real-time reinforcement of the concepts. So, Debbie asks me all the time, Debbie, what time frame are you trading? Is it near its destination? What are the pivots? Is it accelerating? What's the sector doing? Another great example. So this 15-minute chart blasted in the morning. It is not retracing to give us a pivot. Consolidation through time, the daily chart was multiple time frame was on our side. This red bar ignored, which I didn't know until, a couple bars later, and then consolidating into the afternoon. This was an absolute beautiful late day breakout setup for us. Breaking out at 3 o'clock, initial move, bullish price action, red bar ignored. Just to show you that this applies to any time frame that you're trading. This was a monthly breakout. So this is a many months trading range, couple breakdown failures. It's getting tight, closing breakout. So if you bought that, stop under the bar's low. The pivots aren't marked, but again, you could see that it's so strong that it didn't pivot. And then this multi-month consolidation, this would be your new pivot low right here. Once it broke out, I would move my stop under this bar. That's just another example. It's 12:49. Yeah, market's selling off right now. We always like to save time to look at real charts, answer your questions, and see if we can apply today's subject to some charts. But we put together this special for you today. Greg's swing trading course is the amazing course of putting all those concepts together that I mentioned. Learn to objectively read anything that moves. Has trader psychology, trade management, a little bit of the trade management component. Greg has this advanced management strategies course. Why don't you tell them what's in this beautiful thing, Greg?
Everything. But the management goes much deeper into the math of trading and adding to positions in different ways of adding on the way up or adding on the way down, which is say adding on the way down, average down. Yeah, sometimes the appropriate time, but all of this course is the course everyone should start with, but rarely anybody does. So that link on the bottom, just as Dan typed it with the hyphens, will take you to where you can get that course off half off, as well as the swing trading course at a discount, and a room and a month of the green room at no charge. There's also an hour-long recording in there of a presentation that I did a while ago on swing trading, which you'll enjoy. Even if you don't buy the course, which and the AMS course, take advantage of this special, which we extremely foolish, you will enjoy the recording.
Well, and also just to emphasize, this swing trading course $797 is $200 off in and of itself.
Right.
And then 50% off that. So check it out. Let's any questions, email Greg directly. He's the author of them. And let's take a look at the markets here and pivots and trends for the next 10 minutes or so.
I used to do that, Don, years ago, but as I got older and couldn't sleep and have to take Ambien. I don't really dream about much of anything anymore.
I still do. I dream about trades, absolutely.
Yeah. Let's see. All right. All right. So I got a few charts, intraday charts. We got the broader markets here on a 5-minute time frame, and you can see the pivots that are marked. And so we follow it the same way. Now, as an intraday trader, using the 5-minute time frame, and I'm going to see more pivots than I would on an hourly time frame, of course. But from an intraday trading point of view, I like the 5-minute time frame. So in the same aspect, when I see a pivot form, just looking at IWM here, the thought immediately becomes there should be buyers there. And then bottoming tail bar, that was a big red bar, says, hey, they stepped up again. And so now we see, as I typed in the room that John's Tesla trade was rolling over. We see the markets are rolling over. And where's my little drawing thing there? Here's our major support that prices are coming down to. This one took out the high and now it took out the low. So that violated 2 pivots. And now this is going down. I don't know where my pivots are here, but that violated, and this is going down. There's going to be another pivot here. So we look to the left, and the diamonds, which were the weakest, are going. This blue line is the opening price on the day. This is the closing price of yesterday. Now we've got a wide range bar. Looks like it's headed down into the void, this unfilled gap. So we'll see. We're coming into the Fed announcement at 2 o'clock. This profit taking, which could get out of hand, but then things are going to get quiet as traders feel, hey, you know what, news is coming out, even though this looks like it'll go down, it could rip right back up in my face. Right. Tesla is right up here, John. So this was discussion in the room before based on pivots, and John wanted to get long this, and it was based on the 2-minute chart, and we had a discussion in the room that there really wasn't a setup there on the 2-minute chart. It was a breakout failure, and then it ripped back up again. So then we talked about shorting it, and I said, okay, this is the point that it's pivoting. It made a pivot, created resistance. It retested it, made resistance. I said, this is the place to short it with a stop up above here. We don't put it exactly above there. It tends to be too close. And now it made another pivot and another pivot, which says, hey, it's continuing
Lower
resistance. Yes, lower pivots. So sellers are coming in as it reaches these areas. And then finally the buyers gave up. It broke the pivots. And now, as I pointed out when we were talking, those bottoming tail bars, this is going to be a pivot in a smaller time frame. See it right there on the 2-minute? That's the same area. So I know these bars that poke under a bar or two and spring back up in a higher time frame are going to be a pivot. And so as I look at this, I look at this area and say, you know what, somewhere in here, buyers are going to begin to step up, because in a smaller time frame, they're recognizing that area as an area of support. So we just simply look to the left. I don't have to draw trend lines. I don't have to draw fib lines, speed lines, Gann lines, any lines. All right, just look over there, see where there's pivots and overlapping bars. And as Don asked, as we change time frames, yes, the pivots are going to change. So if I change this to a 15-minute chart, no pivots. We condensed the information. This one has a pivot down here. And so on. It's just you have to accept the time frame that you're utilizing. And whether there's going to be pivots or not, but you see up here on IWM, it got close to this pivot area of resistance. And the same with the Dow. It got up there right at the beginning, at the open, and now it's just not, you can't get any further. Stephen asked me, are you using a proprietary pivot indicator? Is there something similar in Thinkorswim? It's extremely simple, nothing proprietary, Stephen. We don't have anything that's proprietary, right? Just what's between Dan and I's ears, right? And we share that with you every.
I was going to say, no, that's seasoning. It's not proprietary, right?
Yeah. So right. All of this is just 3 lower high bars to the left and right. Now, years ago, I used to do a course that talked about different types of pivots. It was just kind of overwhelming. It was good information, but as I'm explaining, recognizing these bars where they poke down, you know that there's some kind of support there. So the simplification of pivots and how to understand this is so much better and easy. It's so simple. Anybody can understand it. And it's just 3 high. Do you put them in? No, Stephen. The software does it. So in TradeStation, it's called pivots. I think it's just pivots. And you just put the setting to 3. Dana's saying that in TAS, I don't use that. He said it's called fractals with a period of 3. Right. And so in TC 2000, we have a little code that's in there that, look, all of this stuff in TC 2000, if you buy the course to become a member in the green room, we'll share it with you for free. Right. So happy to share this little pivot thing that, you can see right here. This is the code. It's not proprietary.
Do you copy and paste it, if you don't mind? For those who want to program it themselves.
Well, I can. I don't know if it's going to paste. Yeah. So there, it's different code for different platforms, and it's more involved than just copying and pasting that. You have to know where to paste it and how to set it up. So when I send this to somebody, it comes with instructions on how to do it, which isn't complicated. You just need the instructions and the layout. So in addition, I share all of our scans that come with the course. Again, we don't own the software. You have a monthly subscription. It's really, I think it's very reasonable, but there's scans, uptrends, downtrends, sideways trends, wide range bars, 1, 2, 3 patterns, and some days they're going to be more than others. The other day, the bearish wide range bar had almost 500 of them. There was only, I think, 19 of the bullish ones. Now there's 90.
That was Friday.
So, yeah. Things change as market environments change. So look, Dan and I share a tremendous amount of information. These MT Lives are free. Sign up for them at the website under education at the bottom. The fast track really is the courses. You get everything at once, and we do coaching. I did coaching session last month. Dan will do one this month. I'll do one next month. That all comes as you become a member. So we continue the education, through those coaching sessions in the green room, of course, and MT Live, and just the repetition is what you need to make it second nature. So with that being said, our time has run out. I hope you've enjoyed the session. And that link that we posted has an hour-long presentation I did in the past. So enjoy that, whether you buy it or not, the course or not. All right. We'll talk next week.
All right. Good trading, everyone.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.